I want to welcome in Tom Hayes, Chairman and Managing Member of Great Hill Capital. We put your full Thomas Hayes. I always call you Tom.
I prefer Tom. That's great, Diane. Good to see you.
It's good to see you. I always love chatting with you. All right, let's talk about kind of the broad market weakness we've seen first. I know I've got some notes from you. I want to get into Mag 7, but I want to initially start where we are with this reaction to tariffs. Tariffs were a hallmark of the first Trump administration.
Yeah.
It seems like it's going to be a hallmark of Trump 2.0 as well. What is your takeaway from the first administration with regard to tariffs and how to operate in the volatility that we see now?
Yeah, you can't make investment decisions on things that are outside of your control. So I always like to say, welcome to Trump 2.0, same as Trump 1.0. New headline, new tweet, new volatility, but resolves higher over time. And the thing we also have to keep in mind about these tariffs is what is implemented is a one-time level up. It's not 25% compounded at 10% per year. It's 25% one time. And that creates an environment where what we see every 4 years in a post-election year is February and March are extremely weak. Why are they always extremely weak every 4 years? Because it's policy uncertainty. We don't even need good policy, Diane. All we need is known policy.
Right.
And right now we don't know that. I think we're getting some firmness on that, and I think the market's ready to start to have a technical bounce here.
Okay. All right. Speaking of a technical bounce, I wonder what your thoughts are on the Mag 7. They've really underperformed this year as a group. You know, whether we're looking at NVIDIA, it's majorly down this year. Microsoft, Alphabet, Google, you name it, Apple as well. Only one that has a gain so far this year that I've noticed. I may be missing one, Meta. What is your expectation? Are you expecting to see some kind of technical shift here? Some would call them oversold. What's your thought?
Yeah, I do think we're going to see a technical bounce. It's interesting. Off their 52-week highs or recent highs, they're all down over 20% or around 20%, with the exception of Apple was down like 12.5%, 13%. Our theme coming in, as you may remember, was underperformance of the Mag 7. They had, and it's fundamentally driven. It's not just technically driven in that their earnings are decelerating from 33% last year to 16% this year. So they're re-rating in terms of price. So we're going to get a technical bounce, but I do think they're going to be a bit range bound, maybe back up to the top of the range for this year, underperform. Real opportunities are going to be under the surface, unmagnificent 493. And international. My goodness, the spread between international and domestic has been fantastic. I think that theme's going to reoccur like we see every 10 to 15 years. We've been 14, 15 years U.S. outperformance. It's time to shift back to some international.
So we have seen some international perform better, for instance, in China. Is the theme of U.S. exceptionalism over just for this year?
Well, when they shift, they tend to be for many years. As a matter of fact, Reagan's second administration, interesting parallel, international dramatically outperformed. U.S. did fine, but international dramatically outperformed. I mean, the spread between the tremendous 10 tech in China and the Mag 7 is 55% this year. Year to date, China tech's up 45%. Mag 7 was, actually it's more now, Mag 7 was down 15%, so that spreads about 60%. And I know this because we've been building a BABA position for 2 years that did nothing, and all of a sudden it went up overnight. And everyone's like, you're a genius. Well, it took us 2 years to build the position. We were buying in the hundreds, we were backing up the truck in the 60s, and here we are. So I think it persists.
Speaking of stock picks, I do want to get through some of yours. You got a few. You've got Baxter International, you've got Stanley, and you've got Boeing as well. Where do you want to start?
Let's start with Stanley Black & Decker, because that's the most hated. We're a contrarian, as you know, for a long time. Stanley Black & Decker is a construction play. So they're going to say, let's buy home builders. Home builders are down a lot. Stanley Black & Decker will benefit from lower rates because construction has stopped, consumer sentiment with the policy uncertainty, housing starts have stopped. That's all going to come back. We're seeing the 10-year yield come down. We're seeing that as an initiative of Treasury Secretary Bessent and Trump.
Scott Bessent,
Mortgages are priced off the 10-year yield. You see a high 5 handle on the 30-year mortgage, which will be fostered by.
You say we will see.
We will see
this year.
I think, but before the end of the year, you're going to see 5.99, something like that on the 30-year mortgage, and the housing is going to go crazy again. Meaning construction, meaning Stanley Black & Decker. They've taken, look, they overstocked during COVID because they didn't think they could get parts. They've destocked, now they're restocking. They've taken $2 billion of costs out of the business. That's $11 a share, and their gross margins, which troughed at 20%, are now reaccelerating to 35%. So this thing is going to earn money. Last time they had this kind of gross margins, it was a $150 stock. It's trading in the 80s.
Okay, we have a little over a minute left.
Let's go.
I hate doing this.
What do you like?
Okay, Baxter. I really like Boeing because I know you just.
Let's do Boeing.
Yes.
All right. So Boeing.
I mean, when I say I really like it, because it's somewhat of a contrarian pick. You wonder if it's hit a bottom now, basically.
Yeah, I think we're there. We probably hit the bottom at 138, then we rallied to 180. Now we're back into the 150s. This is a great final opportunity to get into Boeing. Why? Because look. Love Boeing or hate Boeing, they made a lot of mistakes in the last few years. They've got Kelly Ortberg. He came from Rockwell Collins. He's fixing the thing. At the end of the day, it's a duopoly.
I know.
So if you say, I don't like Boeing, okay, go to Airbus and wait 25 years for your next plane. So they're going to mint money. They're going to do phenomenal. Global travel is growing. Their demand is going to continue. And the leadership, now you have an engineer versus a salesperson running the company. They might actually build the planes right.
Yeah. All those production and quality issues.
That's right.
Yeah. That's certainly something they had to work on. All right, Tom, we're going to have to leave our conversation there. I always love sitting down with you. That's Tom Hayes, Great Hill Capital. Thank you so much for joining us today.